All right, good evening. Welcome, everyone. Welcome to the Hurley Investments Market View Commentary for Monday the 31st, the last day of July. Pretty amazing to see our market give itself a pretty good turnaround today. I had figured we'd have a sell-off and the market would just sell off, right? Just do what markets do. It sells off today. Today's the day when we do our management fees. So it sells off today, comes back tomorrow. I would expect it to come back tomorrow quite nicely. But there's a couple things I wanted to go through today for you. Disney earnings. If you were going to think of Disney earnings, what are your expectations of Disney earnings right now? What would you tell me if you're like, you know what, let's talk Disney earnings? What would you tell me in regards to Disney earnings right now? That's not the one I'm looking for. Pictures. And a couple of you are typing things in. I'm trying to do two things at once. Sorry, guys. Screenshot Disney earnings. Meet or beat. After all, they cancel the dividends, so they should have more money on hand to ride any weakness in the parks. So the first one, weakness in the parks. And this is an interesting concept because the California parks are booked 4 weeks out, and the October Halloween Bash sold out in 4 hours. So I think that's at least a 2 million or $2.5 million person park. We had 3 weeks to get in. They did not have an opening for us to get in there in California, and their Halloween Bash sold out in 4 hours. Now Florida is losing roughly, gonna do the math, 4,000 divided by 30 days. Wow. So Florida is losing roughly 150 to 200 people daily, or 4,000 less visitors a month. Doesn't seem too bad to me. Europe booked, but China reopening. And China probably has bad numbers. Kind of a hodgepodge of what's happening in regards to Disney, because if you ask me, I think the parks numbers are Merrill Lynch, I believe is the one that came out with that. I think it's Merrill Lynch's way to lower the price down to 75 to 78 when someone's going to back up the truck and take it higher from there. Well, you said there was no weakness. Yep, I didn't see it in there in California and in Europe. Mary, correct. Movies have lost money per the cost to make and media, I should say, and advertising, but not 900 million, and did make money on some. So it will be interesting to see if it'll be interesting to see what that part of their business says. And then the other one that no one has said yet, subscriber loss in India expected to be between 4 to 8 million due to the cricket contract change. So there are some things happening that are not positive for Disney. On the same level, I think it's undervalued right now. I think it's ridiculously undervalued. And this is one when they come out with their end of the year movies. Realistically, I expect to go down to 75 or 78. So my thought process is, how do we trade Disney earnings on the 9th of August? So if we're looking at this, we see a cost basis sitting at this one at $87, currently trading at what? Closed at 89.03. Last trade was at 88.89, so it's lost 14 cents in after-hour markets. As I took a look at it, I'm thinking, okay, we did get it in the money slightly, right? Come on. All right, so we did catch it in the money. What do we typically do? Actually, I should just say, what is the risk of 500 shares costing $87.23? It's kind of a simple answer. I'm going to run you guys through this because it's been a while. Maybe some of you I haven't done this with. There you go. $87.23 per share. That's correct, Mary. Every penny. That's what I was looking for, David. Every penny. Correct. So in this case, let's just do the math. 87.23 divided or multiplied by 500. By my calculator, it is 43,615. Currently worth 44,500. So we've got about a $900 profit in these shares of Disney right now. If I was going to protect, which we started protecting about a week and a half ago, if we are going to protect, we would protect it at 88. So if I'm looking at protection here, we have Disney puts at $86. We went out of the money. And it costs $3.15. Those were not the puts I were looking for. Let's match the ones up that match with this one. 1 second. I'm going to find the ones that matched up. Well, I guess I'm not. It is what it is. We're going to count these ones. Bought to open August 25th. $86 long puts for $3.15. New risk in trade, $87.23 plus $3.15 minus the right to sell them at $86. If I calculate all this together, $87.23 plus $3.15 minus the $86, I come up with a risk of $4.38. Divide by roughly 90 is equal to 4.8% of total invested capital. I want to lower that. My goal, how can I lower that amount for earnings coming up? So my expectation is go to Disney, and we're going to add a leg. I would sell a call. We would do 5 of them, right? Expiration is probably going to be the monthlies of September. Strike price, we have a little bit of profit in it right now. I'm probably going up to 95. Let's take a look at what 100 would be. 100 is $1. I'm probably going up to 95. Bid ask is 93 to 91.96. You guys are not seeing that. Sorry, I'm doing Disney up here. See a bid of 193 and ask of 196. I'm choosing the monthlies for selling a call. I'm going to just call it 195. I'm going to go with the 95s, I think. Reason why I'm going to go with the 95, if I do my math, sell to open, a September monthly, short call. I might get a credit of $1.95. Overall risk is equal to $4.38 minus $1.95. 4.38 minus 1.95. 2 point is equal to $2.43, or divide that by now $88, right? Because you took a $2 credit in roughly, or 2.76% of total invested capital. I'm going to be the first one to tell you my expectations, right? Disney, probably going to $75 to $78. And all I'm doing is I'm just looking at a chart, and I'm going back to the most recent time frame that Disney was down touching that level. I know a couple questions came in. Give me a quick second though to go through that. So if I'm just looking at a chart, you got to go back to the 79. So it's actually $79. $79 back to what, March of 2001. So that would be my expectation. I remember earlier where it had a hard time between that 76 to 78. So here comes the question. In fact, Maud, you said it and Mary said it. So the women are on top of it. Why would you cap Disney at 95? And what if you are wrong? Right? Adjustment. Buy back the short call for a loss. Add a short put to cover the short call loss. So as I was looking at what that would be, as I was looking at, okay, how would I figure that one out? It depends what I'm trying to get to, but if I was to change it and sell a put, right? Selling a put, still at expiration 9/15. I'm going to go out to an 85. That gets me pretty close. So what I know is to make up that money, I have to go out roughly 7 weeks at $3 below the strike price, $3 strike, a strike price $3 below the current trading price, or $3.89 below the current trading price, and it's going to give me what I'm looking for to make up for that loss on the short call. Well, Kevin, right now it's $2.89. I understand that. I'm going to go with $3 because there's some volatility built in right now. And off we go. Now, Maud says, hey, I saw this hanging wedge and it popped above the upper trend line. Why? Why did Disney pop today when it's been a basically sell the news kind of story? Why did Disney pop today? Yeah. No, it's not. It is not a. It's not an analyst upgrade. No analyst upgrade. The past two executives that could have taken Iger's place are brought back on. So he screwed up. He chose Chapek. Chapek didn't do it. He brought back the competition. It's between one of those two to take over for him in the next 2 years. That is what's going on. As a reminder, the market is heading higher now because there have been cash available on the sidelines. And it's also coming from overseas. So all that, hey, United States sucks, they don't have any money, it's a bad place to go. It's shocking how much money comes to us from overseas markets. That money is coming from somewhere, and there's a lot of overseas money heading our way right now. For that reason, I can also tell you, I think earnings have been an overall surprise. They haven't been as bad as people have thought. They also haven't been as good as some people have thought, unless you're talking about Meta, right? Meta did amazingly well. Disney, maybe not so much. So we have Apple coming up. Well, we can go to earnings, but Apple coming up on Thursday, Square on Thursday, CVS on Wednesday, Pfizer on Tuesday, and on the 9th, next week, we have Disney. That's kind of what we're looking at. That's where we're deciding, hey, we've got to make this happen, and we've got to see some, we're going to see some movement coming up here pretty quick. So yeah, I got to put Pfizer in here. How come I don't have Pfizer? You guys should be yelling at me for not having Pfizer in here. 08/01. All right, briefing. Just some news that I find interesting. It's like we're no longer worried about inflation, right? If we told you in March 2022 the Fed be raising interest rates a total of 525 basis points over the next 16 months, there'd be a run on regional banks in March, the Eurozone would slide into recession, China's reopening from its COVID lockdown would be a disappointment, core inflation remain north of 4%, there'd be a deep inversion of the yield curve, and there'd be no end in sight for the Ukraine war. How much would you tell us that our market would have been up? What would you have said? You're crazy. I buy it. If I was going to tell you all of those things would happen, what would you tell me about a market if I was going to tell you, yep, it's got to be up? Nobody's saying anything. Why aren't you guys saying anything? If I was going to tell you all of these things would happen and our stock market was going to be up, what would you tell me? You can be honest. You won't hurt my feelings here. You're nuts, Kevin. You're messed up in the head. Yeah, it doesn't make sense. It really doesn't make sense. If it comes down to it, once again, our market is overpriced. I like, though, that instead of saying, hey, we're just wrong, what it all means, higher interest rates are good for savers wanting to avoid riskier assets. Higher rates are good for fighting inflation. Higher rates are good for strengthening the dollar. Higher rates are good for attracting capital from markets where interest rates are lower. They are good for weeding out weak, over-leveraged companies. They are good for popping assets bubbles. They are good for providing future cuts if or when they're needed, which also boosts our stock market usually. There is a disconnect in our market right now. It could be the last gas to pull the rug out from underneath you. Lee said, I'd like to ask why. Lee, the only answer that we found that I can document for you is we have had more money coming in from overseas than were ever expected. That really is the only thing that you can document that's pushing the market higher, is that money overseas hasn't been flooding, but has methodically been entering our stock markets. So that's what's happening. It's not, we weren't an oversold. We don't have the GDP that talks about this. The only thing that I can tell you, well, don't forget, like 70, high 70s, low 80s% of this gain is truly, you know, somewhere between 7 to 11 stocks. That's making up roughly 80% plus of the gain in our stock market. Is that 70 to, you know, 7 to 11 stocks that are overweighting or moving our market that high. Some people last week were saying, Kevin, we had a couple big up days and a couple sell-off days. Of course we did. Anyone remember what happened last week in regards to one of our major indexes? Bullish and slightly overbought. Going to bring up the S&P here. Yeah, and you want to remember what happened to our indexes last week? Big sell day on Thursday. Yep. But that really wasn't a sell day per se. But anyone know what happened last week? There was a rebalancing of the weighting on the S&P 500. We went through a rebalancing. And again, some people are talking market crash, doom and gloom. Did not happen. It did not happen. All right, earnings. We have some earnings coming out. This is the second biggest week of earnings. We have Rambus and Rig today. Lots of them tomorrow. Altria, British Petroleum. Obviously, last week, both Chevron and ExxonMobil did not do very good. Marathon Oil, Coors. Coors should do better than Budweiser, right? Who reports this week? Siri, Uber, AMD. Very interesting one on AMD. Chesapeake Energy reports. Devon Energy reports. Neither one should do any good. EA, Mosaic, New Skin. Starbucks reports on Tuesday. VF Corp reports on Tuesday. And for us, we're going to pay attention to Pfizer. On Wednesday, another pretty big group. DuPont, Humira, Kraft Heinz Company, Yum, Clorox, HubSpot. I forgot what oil company that is, MRO. Vacation is Marriott, right? MGM Grand reports, PayPal reports. We have Qualcomm that reports. I watched that one to see where Apple might come in. Robinhood, hopefully they'll go out of business pretty soon. CVS reports on Wednesday. Another big day for us on Thursday. Budweiser. Budweiser will probably report really bad earnings. That might be an interesting play. If you wanted to do a flyer, go put puts on Budweiser for a month. See if you can't make a pretty good bet there. LNG, Cheniere Energy, ConocoPhillips, Cummings. None of these gas companies are expected to do pretty good. Hasbro, Kellogg is in there, Murphy Oil, Shake Shack, that's kind of an interesting one to pay attention to. Monster Drinks, amazing they do so well. Big ones for us, Apple and Square. And then on Friday, we have Dominion Energy, Fluor, and I went PPL Company. We have the Chicago. Excuse me, Chicago PMI, not expected to be very good. And it wasn't. ISM Manufacturing, it's not that. ISM Services. They call it non-manufacturing. It's ISM Services. That's how I knew it. Construction spending. And the JOLTS numbers are coming out on Tuesday. ADP employment numbers, which are not been accurate and have not been accurate, come out on Wednesday. Thursday, initial continuing claims. This is kind of a big day. Productivity, unit labor costs. And these are the ones that people are paying attention to see how bad inflation is hitting us. Factory orders will move the markets pre-market on Thursday. And ISM services, dang it. So that means that ISM manufacturing comes out tomorrow morning, and that will definitely affect our futures. So on Tuesday, we have ISM manufacturing, ADP on Wednesday, Thursday, productivity, factory orders, ISM services, which has been good in general. And then on Friday, our average work week, which for us, we're most worried about. Man, I wish I could just type like I'm supposed to type. Non-farm payrolls, private payrolls, unemployment, and hourly earnings. That's what we're looking for. That definitely will move our markets for futures. All right, protection for earnings. We do have some things we're letting run. An interesting article on will lower inflation halt rate hikes. If you have something to look at, this is a really interesting article. This is what I'm also going to use as our I'm just going to use this particular picture. But if you want to understand the raising of interest rates and if it's really going to help out, great article to help you better understand what the Fed has been trying to do and if they need to keep going. Interesting article on Ford. Expectation on Ford, we might just finally throw in the towel on Ford and let the $15 puts take our stock away. They're good as a company. They made money. And that's on top of losing 4.5 billion. There's still 600 billion cash flowing free money. They just have not understood, if you're carrying around any weight in your car or using the air conditioner or using the maps or using anything electric, it's a huge drain on the batteries. Out here in Utah, we keep having people die from battery cars that catch on fire. They're driving too damn fast in them. They're spinning off the road and down embankments and killing themselves in fires because they're still too dangerous for protecting those batteries from the people that are driving those cars and that are driving them irresponsibly. So not one of the best things to have on the road, and it just doesn't make sense. And then obviously last week the contraction in China extends for a fourth month. A lot of people are worried about Baidu. We've got protection up at a higher number, may get it up to 150, but yes, we are paying attention. Baidu is still a couple weeks out, so we don't have to worry about it just yet for earnings. But with that said, what questions do you guys have for me? What questions can I answer for you in regards to our stock market or that we have coming up here in the near future? And yes, David, so yes, full collar on Disney for earnings and possibly letting Ford get put to people at $15, booking us a nice profit. Maybe there's a chance to go into something cheaper than Ford that's better and gives us a new opportunity. Ford is still doing very well, but it's being punished because it can't get its arm around electric vehicles. If you buy a Ford truck, you're buying it to not carry anything in the bed or tow anything, but expecting it to, you're basically buying Ford trucks to power your house in the case of a power shutdown. And the honest answer is our country doesn't have an electric grid that can really handle the cars as it is. Still have rolling back blackouts here in the West where we're killing people in the heat so we can save the environment for electric cars. The numbers don't work out. And just to let you know, even though you hear 280 miles on the newest Tesla, my brother has one and he gets stuck in traffic in California, and the true mileage is close to 90 to 110 miles per charge based on how hot it is outside. So please don't think you get this great gas mileage and distance. Well, I did it a couple weeks ago. In fact, maybe I'll re-put it back into here on how far away it is and charging times and cost. It really, to think you're saving money, man, those batteries go out and it's a $13,000 investment. I can't wrap my head around a true savings in cost of owning an electric vehicle. I just can't do it. All right, any other questions you guys have that I can answer for you? If not, I'm going to tell you guys, I appreciate you being here today. thank you very much. I'll get, we've got about 2.5 weeks of backlog that's getting posted. So we'll work on getting that posted here shortly. Last week, the sites were down, but we've made a couple changes and they're back up. We just, Dave and I are going to be working feverishly through the night to get a couple of our previous last 3 weeks up and posted for you. All right, guys. Hey, have a wonderful evening. Look forward to seeing you guys next week. And with that said, take care and I'll see you then. Trying to wait for any other questions to come in, but doesn't look like any are. All right, guys. Hey, have a wonderful evening. I look forward to talking to you in the future. Take care, everyone. Bye-bye.